Hello and welcome to This Week in Markets. The first three trading days could be described as a classic dead cat bounce where the Nifty 50 surged over 2.5% after a week that saw the steepest market drop in several years. Thursday, however, saw a sharp reversal with the Nifty 50 tanking over 3.2% followed by a modest recovery on Friday. Overall, markets ended the week on a flat to bearish note, marking 4 consecutive weeks of losses according to analysts. The Sensex ended Friday near 74,532 while the Nifty 50 closed at 23,114. The Indian rupee hit a fresh all-time low, breaching 93.7 mark against the US dollar, reflecting persistent pressure on emerging market currencies. Foreign institutional investors sold equities worth 29,898 crore rupees during the week, moderating slightly from last week's heavy outflows. DIIs meanwhile infused 30,640 crore rupees, helping absorb most of the selling pressure. While India VIX did not spike sharply on a week-on-week basis, it moved in a wide range through the week, indicating continued uncertainty and a lack of clear direction. At the center of market volatility is the ongoing US-Israel-Iran conflict, now entering its third week. The conflict escalated beyond oil with targeted strikes on natural gas fields, LNG infra and export facilities across the Gulf, including Iran's South Pars field and key assets in Qatar and other Gulf nations. Concerns around the closure and disruption of Strait of Hormuz pushed Brent crude close to $119 per barrel during the week before cooling to around $110 per barrel. On the global monetary front, the US Federal Reserve kept interest rates unchanged this week. With oil prices rising sharply due to geopolitical tensions, the probability of a rate cut has declined sharply, with 85% chance of the Fed maintaining status quo up to June 2026. The possibility of a rate hike is also being debated if the conflict does not ensue. Sectorally, the market showed a mixed but fragile recovery. Auto stocks led the gains, rising about 2% as investors brought into beaten-down names after last week's sharp correction. IT, metals and PSU banks also saw buying interest. On the losing side, financials remained under pressure, with private banks continuing to drag the indices. FMCG stocks declined around 2% as rising crude prices renewed concerns around input cost inflation. Pharma and healthcare stocks also slipped, with some rotation out of defensive names. Oil and gas and chemical stocks remain volatile amid sharp swings in crude prices. HDFC Bank saw major pressure during the week following the sudden resignation of its chairman Atanu Chakraborty, citing differences over values and ethics. RBI approved the appointment of KK Mistry as interim chairman for 3 months. The stock witnessed one of its steepest single-day declines in recent years before stabilizing towards the end of the week. Going ahead, we are looking at a holiday-shortened week where the markets will closely track further developments in the West Asia conflict, especially any escalation impacting energy supplies. Movement in crude oil prices remains the single biggest macro variable for India right now. From a technical perspective, the 23,000 mark remains a key support zone for Nifty, with a break below potentially opening the door towards 22,700. On the upside, 23,500 to 23,800 remains a key resistance zone, and a sustained move above this range is needed for any meaningful recovery. That's a wrap for this week. Do you see a relief rally from here, or is it more downside on the cards? Let us know your views in the comments below.